It's coming. Okay. So I was saying semiconductors under pressure yesterday in the markets did great. It's kind of surprising since it's tech and, a big part of the NASDAQ. But, Intel here, I just have to look at the weekly chart. I think it's around $40, 40, well, I guess that's the bottom of the range down there. Well, the tip of that candle, 42-ish, somewhere down here, you would think it stabilizes, and that's going to be the area that we'll see, because the monthly chart of this still looks, last I look, great. It's got this giant base, this big drop, and now, when you go out to the longer time frame, it just looks like, pretty much a normal pullback. And in reality, I'd like to see it not go down to 42-ish and see buyers step up ahead of that, which would suggest, a more bullish view, and that the pullback into that area making a higher low than coming all the way back down to the major support area. Micron was downgraded today by Goldman with a target $50, and the article actually mentions 20 to 50, which, wow. Yeah, I mean, it's already below $50. So maybe what I had read there, so it's like 20 to 50, but that'll be interesting. Had a heck of a run off of that low here from 2016. And where is it at right now? 41 and change. Well, actually, maybe it bounces. We'll see. Anyway, but interestingly, that, semiconductors, and let's look at the semis here. XL. So there's two semiconductor ETFs that we follow. This one doing better, and you have to look at the stocks that are in it, of course, to really see why one's doing better than the other. But this doesn't look bad at all, and actually had a bottoming tail yesterday versus probably SMH, which looks worse. So it's interesting that, Micron's going down, Intel's going down. I mean, I saw KLAC, that got whacked. And Xilinx looks great. So, that divergence is kind of odd. And their AMAT going down while Xilinx is holding up. In any event, this is not a pretty sector, but interesting that we see the technology holding up and looking really well, which is a much more, of course, diverse index. That being said, this looks good. Things are down a little bit here this morning. And good morning, John. But really no big deal. Like, it's pulled back a little, you see on the hourly chart. And as long as it doesn't get out of hand, meaning the selling, I actually prefer the fact that it's down pre-market here rather than gapping up from that green bar. Sometimes they gap up from a green bar like this, and then it spends the whole day consolidating, while there's profit taking going on. So I actually like this. And just like with a wide range bar, right? When we see a wide range bar, we don't want to see prices retrace more than half the range on any corrective action the next day. And this bottoming tail bar is a wide range bar. It may not look like that, where the open and closes are at the extremes, but this is a wide range bottoming tail bar. And I look at it the same way. Not only do I not want to see it retrace more than halfway, I don't want to see it go down to yesterday's open. And so that's part of our analysis today, to just objectively monitor what's happening from this time frame. Meaning, so even we look at smaller time frames, and we can look at, and I do look at a 5-minute chart, as you know, and the 5-minute chart in a downtrend looks like it goes lower, but we say, oh, as long as it holds up and doesn't retrace and definitely go down past yesterday's opening price, say, well, this is just, in this time frame, the corrective action that's happening. And what we want to do is wait. From my point of view, this is the time frame I look at intraday besides the hourly. So I want to see this time frame begin to show alignment with the daily time frame. When I see that, that's going to tell me that this should now start to move in the direction of the bias from the daily, right? Meaning uptrend, pullback, right? This 3-day type of bottoming action that eventually turned higher yesterday. And maybe this is a consolidation day, but whatever it does, right, stays halfway between. Even if we said, I'm not even looking at an intraday chart, but as long as it stays above yesterday's opening price, I think things are fine, whatever, no matter what this looks like. Right? So it just gives us a way of just focusing on the higher time frame and whatever's going on in here to let it play out any which way it's going to do it. Right? I have the Qs, the NASDAQ 100 futures pulling back toward this prior low. So from an intraday point of view, this is the 5-minute that I'm still on. This is where buyers should begin to step up. And you can see that that's actually happening right now. Let's go back to the 60, not get too close. So we got this major support on the 5, this minor support here. This is where the pullback happened and buyers stepped up. During that pullback, right, blast off through resistance, pullback was resistance, becomes support. Pretty basic stuff. No diagonal lines. Just look to the left and see, your simple support resistance analysis. Right? And now we'll see what happens here. It probably will. I mean, years ago, Pat, they said whatever the direction Apple went in, that's where the Qs went. It's still in effect for sure, but it's not as big as it was years ago. Meaning, it's $1 trillion company now, right? So it's bigger than it was, but it doesn't seem to have that effect where it's like, one stock dragging an index around. That's, hey, Amazon has become the monster, that it wasn't back in the day when Apple used to pull the index around. So Amazon offsets any weakness in Apple. And then there's Google, which has been weak, and Facebook has gotten weaker. So, there are some big stocks in there, but, if Apple is dropping, let's see, Micron's down 5%. AMD is down a little bit. That's been holding up the best. What do we have here? Amazon's actually up a little bit. Facebook's down a couple of points, which, but it's in a downtrend. And Tesla has been all over the place here. And Baba down, Netflix up, actually. And so on. Twitter, nothing. Google down. So some profit taking after yesterday, which, again, as I said, this is going lower. As long as it doesn't retrace too far, it's going to be fine. Let's hope that is the case, because yesterday the buying was strong. All right. Let's see where the Dow is. Pretty flat. So remember yesterday, it was breaking down, and we actually got a bottoming tail bar. So from looking at the indices, the market looks just fine. And one of the things that I wrote, I don't know if it was in this Monday's letter or maybe it was in the letter prior to that on a Monday. And I said, one of the things that you find when you've been doing this for a while is that corrective periods in the market, like this is a corrective period, which looks like no big deal. Or sometimes you get a market that pulls back 5%, sometimes 10%, whatever. And it really masks, because they're diverse indices that mask the underlying devastation that can happen in a particular sector or stocks. So you can't look at the broader markets if you own an individual stock and say, hey, everything will be okay. It doesn't mean it's going to be okay, because individual stocks will get decimated when it seems that the market is just going through a normal correction. So adhere to stops. Don't look for excuses not to adhere to a stop because the broader markets are holding up. Historically, they'll hold up, and there's going to be devastation in a particular sector or numbers of stocks. Bonds have reached this major support level. Starting to see a little stabilization here. So interest rates have gone up. That's a good thing, which will widen to some extent the yield curve, what we wanted to see. So that's fine. Oil had a monster day yesterday, and when are these energy stocks going to pick up some steam here? Where's this XLE? So this wild price action that we've seen here with a breakdown, the deeper retracement into resistance, we thought that might hold up and move higher. It fell all the way back. Retest with a bottoming tail bar. And this is where the concept of bar by bar analysis really shines. Initially, when I came up with the concept of bar by bar analysis, it was from the point of view of monitoring a trade that I was in objectively. Because once you've determined that you want the trade and you're in it, now you're dealing with the unknown. And that's where all the stuff between your ears starts to play its games on you, because you have no new information, unless your stop gets hit or your target. So just one red bar could make you think, oh, this is terrible. Well, the bar by bar analysis concept was, let's take this one bar, put it in the context of this bigger picture, and let's see what the next bar does. And it's an ongoing basis. So from there, taking things bar by bar like this in the context of trends really gives you an objective way of saying, this was nasty looking. This looked better. Now it doesn't look so good at all. Now this bar is happening in this area, and now we got that bar. Yesterday's big range bar, it's like, this thing's trying to bottom again. Do I want to take a position on this now based on the double bottom? We could. And we put a stop below here and make sure that it happens. Yeah. I think in a lot of parts of Europe. And probably here too. And so it's a great concept when you put it together with trend analysis and multiple time frames. And that's what MTS is about. Putting together all the pieces of the analysis puzzle, so you don't have to use indicators. Right? All right, gold, who cares? It's trying to hold here, so on and so forth. Anyway, so it was brought to my attention, how we love Tasty Trade, and they really seem to be contrarians as far as, let me just pick something and go against the crowd, which we do that too when we use market internals to say when the crowd is at an extreme, we have a measurement versus just saying, hey, I think this thing went down a lot. You could say, I thought NVIDIA went up a lot 2 years ago, right? And it tripled since then. So just going against the crowd, right? When something's going down, just doesn't make sense. I don't care whether it's, Thea, Delta, Vega, or anything else. I mean, without a chart that says, hey, this is at support, this is retesting a low, you're just getting lucky, to go with a bullish pattern on something like this. Now, I could certainly see this bouncing based on this bottoming tail bar, but I mean, that just doesn't make sense. It was the same thing with AMD. Why take a bearish position on this stock that's been so strong? I don't get it, but do not use charts at your own peril if you're an options trader. With that being said,
or stock trader.
Wow. Any kind of trader, right?
Yeah, and that FCX, yeah, I just looked at it. The weekly and monthly are also in downtrends, and I think they had like a 37-day recommendation. So, you know, it's just a downtrend. Yeah, we love being contrarians, but using the master trader methodology, which is, you know, high volatility, high, you know, either fear or greed. And then the pattern on multiple time frame tells us when to step in. It's that simple. All right, let's look at opens here real quick. We're a little shorter on time. UTX, Condor looks great. P Papa, long stock. Put spread. Gulf Delta looks fine, even though it went against us from our entry. We're have open unrealized profit. Apple up in a down market. We have a put spread for Friday. That looks great. Oh, Intuit. I can't tell. I'm in it. I didn't give it official, but I talked about doing it yesterday. PRSP, long stock. TRMB over the high. I actually got in early yesterday. JWN, covered call. Fine. CMCSA, long stock. Sienna, covered call. SON. FTV. We have no problem, children, so I'm not going to even go through these. AXP is on my list. But let's just go to this list over here now. All right, there's AXP. If the spiders trigger, I'm going to add to my spider position, and then we should have a lot of individual stocks that look great. Here's a marijuana stock down. Tillery, though, gapping up $8. So this is one that Greg and I just commented on, that there's no reason to short this yet. I was looking for some type of bearish M formation. Do I have it yet? Yes or no? Answer no. It's so, I don't care how high this thing goes. It's now gapping up to 104. Let it rally to 150. I don't care. But I'm going to use the identical methodology to get in it when the master trader method says it's okay. Old Lester, we need a pullback. Another marijuana stock. Alex and I sold ours into strength yesterday. There's P Papa, looks great. Maybe we leg into a covered call. ACN, we are long stock and a put spread. Baba, we were looking for a bounce to short. KTOS, we're long stock. Yandex, it's still an open trade under the lows as a short. So I actually like that it's gapping up because then if it triggers, it's better. AON, I'm watching for an entry. I'm just trying to be real selective. Post, long stock, we're in it. FTV, Autodesk. I said I was waiting for a reversal here. That's light volume. I can't tell what it's doing. Said G, we're looking for a bounce to short, break down all time frames. SQ, we're looking at, that's another one over the high. If the mothership is bullish, that's another go-to. Fred, that's a bearish inside day, so I'm going to get rid of you. Roku, missed the entry. What's today? Wednesday. So Monday gave that beautiful right here buy setup, 15-minute chart. I'm not chasing you, so you're done. Jack is another go-to over the high. Intuit, that's the put spread I told you I'm in. Trex, 1, 2, 3. I already set an alarm up here. And iBroker is a short watch, so that's a go-to short. Walmart, we have a covered call with a tightened stop. XLF, I'm in, but well, and our ETF traders in. KWeb, let me add this to my indexes, because this is the Chinese. Insert symbol, K-Web. Because that's and it's optionable and fairly liquid. So that's a way that we can trade those internet bat stocks, they call them, you know, FANG bat. Let's see, Sonic, we're in long stock. Here's a here, Alex, this is your beauty from yesterday, Mixie. I'm going to put that in a window. Looks great. Just, you know, short the low. You know, that was a fairly deep retracement. But then this is a deep retracement and no bounce. So just under the low is a beautiful short. Relative weakness. TRMB over the high. Here's another one, Living. That's a go-to if the mothership is okay. Look at that. Wide range igniting from a master trader buy setup, multi-week consolidation. I mean, that looks fantastic. I'm going to put that in my window. I'm running out of windows here. Living. PPG, and we found these all through scanning yesterday afternoon. That's a go-to over the high. I have an alarm at 113, GPN as a go-to over the high. Clevis, ooh, another beautiful short, Clevis. Wow, those are two beautiful shorts. Oh yeah, I even posted that pre-market in the in our text. AON, I have that already. Mixing, that's a dupe. I posted it to our